My view is it's been pushed out somewhat, but we'll still have cyclicality. How are you thinking about the next kind of 6 to 12 months?
Bitcoin ETF publicized, and I'm sure they're mining a lot of Bitcoins and buying a lot of Bitcoins in non-public ways. So that's, in my opinion, very, very obvious. But I think the counter argument is obvious too. The countries that are adversarial to the United States are going to start buying Bitcoin. So I think it's pretty obvious that the countries that are adversarial to the U.S. will ultimately buy Bitcoin and potentially other coins, but I would say at least start with Bitcoin. And so I think there's going to be an arms race, right?
As inflation lingers, debt mounts, and fiat currencies continue to erode in value, Bitcoin is emerging as both a financial hedge and a strategic asset. Raoul Pal, macro investor, believes the next 6 to 12 months will see continued momentum in Bitcoin and broader risk assets, though traditional market cycles have shifted. He expects liquidity expansion, falling interest rates, and persistent fiat debasement to drive investors toward assets that can preserve purchasing power. In this environment, Pal sees Bitcoin and technology sectors benefiting the most, as global capital seeks scarce, high-performing stores of value. He views the coming phase not as a short-term rebound but as part of a structural realignment in global finance driven by monetary policy and digital asset adoption. Dan Moorhead, Pantera Capital CEO, sees a parallel transformation unfolding on the geopolitical front. He highlighted the U.S. administration's creation of a Bitcoin strategic reserve, calling it a pivotal step that will encourage allied nations to follow. This, he argued, is prompting both partners and rivals including China and Russia to accumulate Bitcoin as protection against U.S. financial dominance. For adversarial nations, Bitcoin offers a censorship-resistant, neutral asset that cannot be frozen like dollar-based reserves. Moorhead expects this dynamic to spark a Bitcoin arms race, as sovereign wealth funds, endowments, and institutions increase their exposure to the asset. With Bitcoin's limited supply of 21 million, rising demand from nations and investors could significantly tighten the market. He believes this combination of geopolitical adoption, institutional inflows, and easing macro conditions will extend the current bull cycle and drive another major rally, reinforcing Bitcoin's role as both a financial and strategic reserve asset. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
And where I'm going with this is the current administration has created a Bitcoin strategic reserve, massively important because that gives leadership to countries that are aligned with the U.S. to do that as well. So there are a bunch of countries, as you know, like the GCC states that are pegged to the U.S. dollar, aligned with the U.S. in security matters and other things. So they're now really aggressively getting into the blockchain space. And
yeah, I mean, last time I saw you, we were both there in Dubai.
Exactly. And so if I were to roll this movie forward, we're currently raising our 5th venture fund right now. And at the end of next year, we'll be done. If we get together at the end of next year, I would say that'll probably be the big difference, is a lot of more sovereign investors, especially ones that are aligned with the U.S., like the GCC, and then even U.S., pensions, endowments, all the people that kind of, got scared away in 2022. That would be the big difference for our own fundraising. But then I think it's important to zoom out one more step. Is I think it's obvious that countries like the UAE has done a sovereign investment in BlackRock's Bitcoin ETF publicized, and I'm sure they're mining a lot of Bitcoins and buying a lot of Bitcoins in non-public ways. So that's, in my opinion, very, very obvious. But I think the counter argument is obvious too. The countries that are adversarial to the United States are going to start buying Bitcoin. And
right.
It's not something people talk a lot about. And one of those countries is, quote, officially banned Bitcoin. But if you, think about China, right? They spent 2,000 years working really hard, saving a lot of money. And all their savings are in something that Scott Bessent can cancel. That's really pretty edgy, to have all of your life savings for a couple thousand years in a security that the U.S. Treasury Secretary can just say, you know what? Nah, we're going to cancel that. So I think it's pretty obvious that the countries that are adversarial to the U.S. will ultimately buy Bitcoin and potentially other coins, but I would say at least start with Bitcoin. And so I think there's going to be an arms race, right? And there'll be like Dr. Strangelove, strategic mineshaft gap, right? Like it's going to be a real race. And as you know, there's only 21 million. And if a bunch of people all want to buy a million each, it's not enough to go around, right? And there again, that's why I'm so bullish, because there's just not enough Bitcoins to satisfy countries' desires. I think the U.S. has 200,000 Bitcoins just, from confiscations, kind of a random.
And China has roughly the same, I think.
Yeah, and China has roughly the same. No, no problem seeing them wanting to buy a million Bitcoins. It's still tiny compared to their balance sheets, budgets, all that stuff. And so if you have 2, 3, 4, like say the GC wants to buy a million, China wants to buy a million, maybe Russia wants to buy some, US, like it's going to squeeze up like a watermelon seed.
How do you see kind of the rest of the year and next year playing out? Because we've got this cyclicality. My view is it's been pushed out somewhat, but we'll still have cyclicality. How are you thinking about the next kind of 6 to 12 months?
Yeah, so there is a cycle, and I've long believed in the 4-year cycle. And when Bitcoin was super low in the last bear market, we put out a prediction based on the past 2 halvings that we've been involved in. This is our 3rd halving, that given the current ratios, and they do change each time and get more muted each time, we forecast a couple of years ago that Bitcoin would hit $118,542 on August 11th, 2025. And it did. It's super crazy. It literally hit exactly the price. And I'll admit, it did it one day before we thought it would do it. It did.
That's freaky. That's freaky. We're living in a simulation.
Freaky. And we did that the last time too. We thought it would hit 69,000 in August of 2021, and it did that day. And so the punchline is we really, really nailed it, predicted that cycle. That was awesome. But then one of our investors on a call said, but doesn't that mean it's going to go down today? You predicted it would peak, and won't it go down? And the most fatal words of any investor is, but this time's different. And so, with all humility in saying that, I would say that although, the past cycles are indicative or predictive of, how it's gone in the past, the regulatory changes in the U.S., I think, just trump everything. They're just huge. And so I think we still have another leg to this rally to go. And so I think if all these endowments come in, all these sovereigns come in that we're seeing, we're going to put the money to work, right? Because when we raise the money, we're not going to sit around for 5 years. We're going to do it, and our peers are going to do the same. So I think the next 6 to 12 months are still big rally. And again, I know it could.
I know it's horrible because you don't want to be hung by the internet by saying you said it was going to extend, but I think it's going to extend.
Yeah. So the fun fact on the markets is, when it has peaked in the past, it's when we've all been the most bullish, right?
Raoul Pal described a global economy caught in an unavoidable feedback loop, where excessive debt forces continuous monetary expansion. He argued that central banks and governments no longer have meaningful policy flexibility. They must keep printing money and lowering rates to prevent the financial system from imploding under the weight of massive interest payments. In his view, this dependency on easy money ensures the persistent erosion of fiat currency value, trapping policymakers in a situation where every attempt to stabilize the economy only deepens the long-term damage. Pal sees this as a structural flaw rather than a temporary issue, one that perpetuates inequality and prevents real economic balance from being restored. Dan Morehead, on the other hand, focused on the global implications of this monetary race to the bottom. He warned that when nearly every major country simultaneously debases its currency, global confidence in fiat money inevitably deteriorates. According to him, this is why assets with fixed or limited supply such as gold, Bitcoin, and other hard assets continue to outperform, not because they are inherently booming, but because paper money is steadily losing its worth. He believes this frustration is now manifesting politically, as more young voters begin to support hard money advocates and alternative financial systems that reject the principles of endless debt and fiat debasement. Let's get back to the interview.
Oh, I think monetary policy is fascinating. We have full employment. Inflation is debasing our assets by 3% a year. Over your lifetime, that's 90% of your purchasing power gone. And they're cutting rates. It's crazy. It really is crazy. So unfortunately, I think on the macro side, there's some bad outcomes coming. And again, these things take 5 or 10 years. So it's kind of a boil the frog type thing. You your viewers probably won't see it happen next week, and they won't go, the Dan was right or whatever. But I think, the macro stuff is just out of balance. That we have $2 trillion deficits in the United States, literally in the best of times. Like, what else could be better? Like, stock market record high, real estate record high, everything, unemployment record low. And if you're running a $2 trillion deficit in the good times, it's scary to think of what could happen in the bad times. So that's my main thing. I think the Fed really made a couple huge policy mistakes in 2020 and 2021. There was a time where inflation was 8% and the Fed funds rate was 0. That's called a policy error, right? And decreasing rates right now when everything's booming, record everything, record fiscal deficits, the monetary system is supposed to be the check and balance, right? It should be the thing that's balancing excessive fiscal spending. And I just don't see that. And it really is wild that the Fed is currently cutting. They're forecasting much more cuts. If anything, they should be hiking.
Yeah, I mean, how I look at it is, yes, there's 3% inflation, but there's 8% debasement. So they're printing fiat currency at the rate of 8% a year globally.
Yeah.
So you kind of add that to the 3%. I think of it as like a 11% hurdle rate right now. So your money's getting evaporated, which is why this rush into gold, crypto, everything else keeps going. But then when you listen to Scott Bessent, who's one of our macro brethren that we've all known for years, Scott is saying he wants a weaker dollar and he needs to refinance the debt and he needs to get rates down to refinance the debt or the deficit gets even bigger. So it's like, okay, you can see the trap now. There's nothing they can do except keep debasing until they get through the debt refi cycle.
Sure. We've seen some people try that, the Argentines and others, right? Like, we know where that ends. And look at countries like Switzerland that don't do that. Their currency keeps appreciating. Inflation is low, right? So that's why I think it's scary. Scott Bessent's obviously an incredibly smart guy. To be advocating those policies is scary, right? And so,
but what if they didn't? I mean, that's the other thing I play through in my head. It's like, okay, fine, it's all well and good us criticizing the Fed and the Treasury. If they didn't do it, then interest payments just keep ballooning and it just gets even worse. I mean, there's no way of cutting the deficit. Even Elon went in, and Elon can basically do anything, but he can't do this.
Yeah. So the thing you have to start with is debasing your fiat currency against everybody else's fiat currency is a race to the bottom. We can't all debase against each other, right? Like, that is the problem. And I think that's why anything with a fixed quantity is surging up in price relative to the value of paper money, because every country, well, not every country, I just mentioned Switzerland's not, but most countries are accepting things that, back in the day when you and I were talking macro in the 90s, people would faint if you said, oh, Europe's going to have these massive deficits. The United States is going to be cutting at 3% inflation. People would say $1 billion to 1 against that. And now everyone's like, oh, it's all cool. Well, let's just do that. So I think that's why everything's at record prices, right? Except for paper money. And that's a graphic we put on our Twitter feed a long time ago, and it's probably on our website, is the price of the US dollar in bushels of corn, ounces of gold, shares of the S&P 500. It's the same story, right? Everyone's like, oh, it's really wild. Gold's at a record and the S&P's at a record. No, they're all kind of the same in a relativistic sense. They're not doing anything. It's the price of paper money that's plummeting. For you and me, we're older. We have some stocks. We have some real estate. It's probably great. What the Fed's been doing, but it's terrible. The majority of Americans are under 40 years old. Fed's not serving them at all. Like, all this cutting, hiking the cost of apartments, the cost of buying a house, it's unattainable. And frankly, I think the feedback came in the election. Young people voted for the candidate that was pro hard money Bitcoin.
And the other thing is, when I look at it, is the real problem is wages kind of go up by inflation or GDP growthy sort of thing, while the assets that they want to buy, like houses, go up by debasement amounts. So it just gets more and more expensive and they never catch up. And it just makes people angry.
The convergence of macroeconomic pressures, institutional adoption, and sovereign interest signals that Bitcoin is entering a pivotal new phase, one defined less by speculation and more by strategic accumulation. As inflation persists and traditional currencies lose purchasing power, Bitcoin's fixed supply and decentralized nature are becoming increasingly attractive to investors and governments alike. The coming year could mark the moment when Bitcoin transitions from a niche financial asset to a cornerstone of global reserves, driving a profound revaluation across markets. With institutional capital flowing in, regulatory clarity improving, and geopolitical dynamics forcing nations to reconsider their monetary strategies, Bitcoin's narrative as digital gold is solidifying into economic reality. This next phase may not simply extend the current cycle, it could redefine what long-term value preservation means in an era of relentless currency debasement. How might the growing adoption of Bitcoin by institutions and sovereign nations reshape the global financial system over the next decade? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.